To the early afternoon on Wall Street, and it's time for a quick reset. I'm Grant Mercer. This is Storm Stock Solutions, and let's bring some clarity to the chaos in today's markets. The tone right now is cautious but focused. Void. According to MarketWatch reporting, the big looming catalyst is Thursday's delayed CPI print, which will finally show just how hot inflation has been running before the government shutdown. Pair that with a cooling jobs market, and you've got a market that's torn between soft landing hopes and sticky inflation fears. That's keeping a lid on conviction intraday, especially in rate-sensitive corners. What has changed since the last hour is how tightly everything is orbiting around two poles: inflation expectations and the AI trade. On the macro side, that tardy CPI story is front and center. With investors already learning this week that the labor market isn't as strong as it looked, a hotter-than-hoped inflation number on Thursday could complicate the Fed's path and rattle rate cut expectations. Pros are watching the front end of the Treasury curve and inflation break-evens for any early tells this afternoon as positioning gets cleaned up ahead of that data. On the upside, the AI theme is still doing the heavy lifting for risk appetite. MarketWatch highlights that the sizzling AI trade has become so powerful that it's even weakening some Asian currencies as local investors swap into dollars, presumably to chase US AI names. When a thematic trade is big enough to show up in FX markets, that tells you how concentrated global enthusiasm has become. Traders are watching the usual I-link leaders and high beta semas for signs of either another leg up or some fatigue into the close. We're also seeing some more stock-specific action. Southwest Airlines is grabbing attention as the stock pushes to multi-year highs. Reporting from MarketWatch notes that Barclays is calling for improved profitability into 2026, and thus feeding a broader narrative of renewed optimism around U.S. airlines heading into the new year. That's a nice contrast to the macro hand-wringing on inflation. Travel and leisure still have a pulse. Under the surface, there's some interesting watch in the background stories. Oracle is one of them. Its shares are under pressure on fresh chatter about stalled data center funding. But as MarketWatch notes, at least one analyst is arguing that particular fear should be almost irrelevant to the longer-term story. When you see a high-quality software and infrastructure name trading off on what some view as a narrow concern, that's the kind of dislocation analysts and institutional desks tend to study closely, even if they don't act on it immediately. There's also a continued drumbeat of stock selection stories around big tech and consumer behavior. One MarketWatch piece highlights Meta as a top pick into the first half of next year, alongside some under-the-radar names like Applied Optoelectronics and Magnite. Separate coverage calls out 6 retailer loyalty programs that genuinely put the customer first, rather than just harvesting data. Those kinds of pieces don't move the indices, but they feed into the themes professionals track. Who's still innovating in aid tech, and who's winning the modern consumer with sticky rewards ecosystems. Looking to the next hour, the battle lines are clear. The market is digesting the inflation narrative and waiting for that CPI confirmation, while the AI trade and selective pockets like airlines keep risk appetite from rolling over entirely. I'll be watching whether we see any pre-CPI hedging pick up into the afternoon, particularly in equity volatility, or if traders stay comfortable riding the AI and mega-cap momentum trend into the close. Remember, this is information and education, not personalized financial advice. As always, you'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.